world, from central bank all the way to, I would say, like to common households. So let's start probably in the beginning. Let's start with the very basics. What is actually money? Because by understanding the main key definition of money will help us to understand what's the case of CBDC and why CBDC potentially may be needed and why there's a lot of activities in this space. Now, there are four key aspects of money. Number one is it's a medium of exchange. Number two is a unit of count, meaning that you can effectively use it as a standardized way to exchange goods. It's also a store of value, meaning that you can store it and you can use it some other times. And at the most important thing is it's a legal tender, which is it is issued and maintained by a trusted entity. So these four things help us to identify like why there's a need for a CBDC in the current form in our ecosystem nowadays. We do have a medium exchange unit account store value, but one thing is missing is a legal version, a digital version of a legal tender. Now, before I continue, let me remind everyone to please question, and I'll be really delighted to answer any question. Now, the things like the case for CBDC, let's understand first what are the key benefits of a CBDC. So things around like efficiency, it promotes efficiency because like it's all in a digital form. Resilient, it is. We have a technology that is now can support 24/7. Imagine like how it is with cash now. You can just use it anytime, 24/7. Imagine you can do that in a digital platform. Things around a legal tender, it's backed by the balance sheet of the central bank, which gives us that certainty. Interoperability around like because it's a token asset, you'll be able to interoperate seamlessly, whether it's off ledger or on ledger. And number five aspect, the most important thing is programmability aspect. Imagine like nowadays, money in a physical form is a very analog, but with the CBDC, there are certain ways that you can program it to behave. Like for example, like things around like KYC, the ability to use it for purpose funding. So some of the benefits that's coming out because of this benefit, some of the value proposition that coming out consistency around, like for example, its ability to transfer of value. So it eliminates clearing. So meaning like at the moment, like if you compare it to the current for example, NPCI environment where it's a bank-to-bank transfer, although it seems like quite seamless when you tap the money, but the reality is there's still a significant amount of clearing happening in the background, an exchange of bank-to-bank account transfer, reconciliation, which all added up to cost. Now with the CBDC, you can effectively manage that by a transfer of values, so it eliminates clearing, and you can do instant settlement right away without any risks or whatsoever. It promotes one of the key hypotheses. It will promote financial inclusion, primarily because CBDC, for example, like the features around programmable money, will allow you to build your what we call transactional identification. So meaning as more you use the CBDC, it shows you your credibility that you're participating. At the same time as well, it promotes, I would say, like it doesn't require a bank account to be able to set up. And I know like part of the problem nowadays with financial inclusion is you need to set up a bank account, which you have to do a lot of KYC process, which eliminates a lot of portions of the segment of the population, which is in fact it's also happening to large extent like in the United States, where they recently had that COVID payments, where a lot of them has to do checks because a portion of the population is underbanked. It also promotes lower costs effectively because with CBDC, it's using a more newer technology and it reduced the need for reconciliation, overhead costs, all of those. It also promotes competition. So take into imagine in a situation now where there's a lot of prevalence of e-money. So CBDC is designed in such a way that it will promote interoperability among this closed loop e-money platform as a way of, for example, if you want to participate in another closed loop e-money system, CBDC will be the way to use as a bridge to move to that across to that other platform. It promotes innovation. This is another key areas that CBDC is advocating because such as like the features of programmable money, it promotes like newer way of business. It's lowered down the barriers. So it's not just only a financial services, it could be an innovation of like a new form of service, a new way of attracting new segments of the the market. And last but not the least, it promotes transparency. As I would like to quote one of my good friend, Henry Alassian, CBDC give us a fighting chance to fight financial crime, effectively because of the transparency aspect of CBDC, which is at the moment with the physical cash, it's almost impossible. Now, moving on, let's compare CBDC with probably the most, I would say, common answers. So why we need CBDC, since we already have the innovation of around like faster retail payment, or even e-money. So there are three things, like, for example, number one, faster payment as it formed, no matter how fast it is just a messaging network that still requires clearing. So the moment you start requiring clearing, it requires like a series of bank-to-bank transfer, and as it invoke associated, it's actually it created more costs. So that's why there's always a high cost associated when you do the payment. Number two, you have e-monies, which again works beautifully, but however, it's mostly work on its own ecosystem. So take into example like M-Pesa. In Africa, you can only use it within their ecosystem, such as like GCash in the Philippines. You can also use it within their, for example, their group of companies, from their real estate to the grocery. But outside that, you can't use it anywhere. So it created what we call like potential risks, and it's also privately controlled. Number three, probably the most logical, the most I would say popular nowadays, is around cryptocurrency. But again, it's very volatile, and again, it doesn't back by a legal tender, so it promotes financial crime. So these are the key payment innovations, which we believe that it's still a gaps, and this is where CBDC will come in and address majority of these challenges. Now moving on, CBDC is quite a very active space since back the very first CBDC project back in 2014. It was started by Uruguay when they launched their own e-peso. Nowadays, almost practically all countries in the world already have done a bit of a research, or there are in their POCs. And as we enter 2021, you can now see like a lot of them are going to pilot, for example, like the Sand Dollar project in the Bahamas, and the EU one, the DCEV, which is the electronic yuan in China, and also the same time as well in Cambodia, their hybrid CBDC, which is now becoming like it's entering into production. So it is now becoming a reality, and a lot of this motivation is really you have a newer technology that allows you to effectively to leapfrog to a much more cheaper, more maintainable infrastructure, as opposed to a traditional architecture we have now that operates the payment system. We as our at R3, we have been privileged, especially also with myself and the rest of the team in R3. We've been there in the very since the very early beginnings of our CBDC projects all around the world, starting from MAS, Bank of Canada, all the way to the recent now with like such as like the Bank de France and the Swiss National Bank. We're very proud of our heritage. A lot of our research paper has been heavily used by a lot of these projects, and in fact, recently we recently launched a CBDC working group that we work closely with hundreds of central banks all around the world, together with the private sector, to further understand the implications, the benefits, the business case, the challenges, the risks around CBDC. And we are in the process of releasing the sandbox, which will help facilitate the central banks to work with the private sector to explore CBDC and to help it, create more innovation around like what CBDC can do. Now, coming out from all the research so far, including our CBDC working group, there's also like the other side of the coin, some concerns coming out from CBDC. To name a few, for example, like the infrastructure. A lot of the CBDC projects nowadays are based on DLT, although such as the one in R3, our flagship product, Corda, which is now a lot of being used in production. There's still a bit of a concern more generally around like performance, transaction per second, throughput, which especially if you are delivering a general purpose full population CBDC, then of course there's a transaction per second requirement. The things around the concern of privacy. Of course, CBDC promotes a lot of transparency, but there's a bit of a concern that all of a sudden, like the central bank or the government will be monitoring what effectively what each of how you use the CBDC. and also the right policies in place. So take into example, like the one I cited here, like the impact of the banking system. A lot of the concerns with CBDCs, like it may disintermediate the banks. Potentially, it will disrupt the credit market because the tendency, if a state issue a CBDC without any proper policies in place, effectively the depositors may shift their deposits from the commercial bank and move it to a CBDC because obviously CBDC is the safest form as opposed to like a deposits, which is we can say it's a although it's backed by reserves in the central bank, it is still effectively it's still backed by commercial bank. So take for example, if there's a bank run or a closure of a bank, you can only get a portion of that money, whereas with CBDC you can get whatever amount that you have because it's backed by the central bank. Now all of this concern have been progressively being addressed, especially around like who owns KYC. So it's some of the thinkings coming out from the Bank for International Settlement, which is the central banks of central bank. It's really around the KYC should be still it should be maintained by the commercial banks or the intermediaries such as the fintechs, because primarily this is not the core competency of a central bank to operate. Things around privacy, following the GDPR rules, such as in Europe, definitely personal data are not being shared. Although transactional data movement, which can be monitored by the central bank, which help them in reviewing the ongoing policies in place, but definitely personal information data is something that will not be shared. So yeah, so and a lot of advancement as well with the infrastructure, as a lot of POCs pilots coming into play. There's now more of a more of a, I would say, positive feedback coming out from the central bank that this is really we're entering prime time for CBDC. Now, I will walk you through very quickly some of the CBDC consideration in designing CBDC. In our flagship product, Corda, we purposely Corda has been developed with an open core. It is an open source in at the core because we believe that a CBDC to be successful, it needs to be supported as a utility. Corda itself is committed by a growing community, thousands more than like already 10,000 developer in creating what we call the source code. At the same time as well, it is overlaid by a certain by a SLA with a certainty around support required by central banks, such as like a 24/7 firewall security, all of those support, and we overlaid that, and that's where the enterprise comes in, and also the focus of the core is to support an open source approach to support M0, which is payments, which is really around like faster payment, the TPS of a payment, the workflow, the TPS, like the KYC, privacy, all of those requirements in play. Now, moving on, some of the key policy discussion, which is probably a lot of our audience are been viewing outside. These are some of the, I would say, top seven key discussion around like the first one is account versus token. There's a lot of debate about like should a CBDC be an account form similar to like you need to open a bank account, or it could be like a token base, which is similar to how we are now with cash, which is like an unspent. So these are two school of thoughts, especially if you go for an account model, then effectively you are not solving financial inclusion because you need to do a lot of KYC. And if you're on the contrary, if you're token based, it's more like anonymized. So effectively similar to cash, you hold cash, it promotes financial inclusion. Second thing, the more controversial one is it interest bearing? So this is where a lot of the policies being deliberated. If it becomes an interest bearing, so it meaning like it's like you're earning interest from having a CBDC, it may compete with the deposits or even like a government bond, which is also like a safe sort of asset class. So things like this are being recalibrated by the monetary authorities, the central bank, the SECs of the world to make sure that a proper design be made. Things around limits, especially when you have CBDC that is being used for cross-border. Things around like residency, foreign, non-foreign resident restriction, especially for example, like our recent project with Thailand, where there's a requirement that it's only a certain amount of currency or money that can be used outside the jurisdiction to protect the FX rate. Things around as well, like what is the policy of a CBDC? Is it only exclusively to be used as a payment? attached to a payment, or it could be a depository back, or it could become like a stable coin, a private stable coin backed by CBDC, where it's called like a synthetic CBDC. So this is also becoming like a hot topic, especially like as everyone's seen in the paper, the US recently through the OCC has now starting to warm up on the possibility of financial services, fintechs to issue I would call like a stable coin. Things around the tiering model. The tiering model, it's around like how does the distribution of a CBDC? I'll explain this one a bit later. Is it directly the central bank giving it to the consumers, directly to the household or the corporates, or is it using the existing financial systems, which is like through facilitated by a bank or financial services? Around interoperability as well is a very massive topic, especially there's a form of standardization as CBDC is being used across various platforms. And the last but not the least, cross-border. In fact, the most low-hanging fruit problem that CBDC is solving is cross-border. But again, some of the discussion around what will be the governance model, especially like it is now a decentralized world where you have central bank issuing one CBDC is being used by another jurisdiction. What will be the governance model? And this is where the Financial Services Board has been actively looking into this space to help facilitate, because we all understand that CBDC is really it's a race to reality. Now, I would like to go through a very high level three types of CBDC. The first one is a retail CBDC, which is classified as a general purpose. This is really designed for households, similar to it is designed as a complement to the existing payment infrastructure, where when you tap, instead of having to probably a bank-to-bank transfer or a credit, you'll be using a CBDC, a transfer value to settle. So this is open up to household, businesses. It's like similar to how we do physical cash, but on the electronic world. The second one is a wholesale CBDC. This is more like exclusively for interbank. So take it to example in India, for example, like the National Stock Exchange or the Mumbai Stock Exchange. The for their settlement, it's only exclusively being used for the purpose of settling securities in that market. So it's only being accessible to certain market, and typically it's issued by the central bank and it's under the account of a FMI, a financial market infrastructure, such as for example, like a large payment operator. The last but not the least as well is the most important is cross-border. So these are like CBDC, either it's a bank-to-bank or really a pure peer-to-peer. And some of the thinkings on cross-border, as I mentioned earlier, around a regulated stablecoin, which is as an interoperability among various jurisdictions. I'm glad we're now getting a lot of good questions here. I continue to invite everyone to please post your questions. Things are as well issue around like the cross-border side is how do you evaluate if there is indeed a bridge currency that will act in between two multiple CBDCs, similar to the project that's ongoing between Bank of Thailand and HKMA. What will be the form of valuation? So similar to like a cryptocurrency nowadays, what will be the stable coin that to manage that certainty? I will set aside the last 10 minutes to answer some of the good questions being raised here, which is really awesome. Now, deep diving into the tiering model, as I mentioned earlier, we have the direct model, which is a model issued by the central bank directly to the household or the corporates. Now, this model, from an onset, is the most, I would say, efficient. But however, this is not really the one that's being advocated by the Bank for International Settlement or most of the central bank. In fact, like a research coming out from the BIS, only 5% of all the research so far has suggested to go with this model, primarily because it will have a massive implication to the banking system. For example, like it by for example, the central bank will now need to onboard core capabilities of KYC to host a wallet, to host like counting the issuance, all of those, which is not necessarily a day-to-day job of a central bank. So it's a massive change management for the central bank and also for the overall ecosystem. The second one, similar to what we have now, a two-tiered intermediary model, where the central bank issued it to the banks or fintech, and the fintechs or the bank distribute the CBDC. Now, the difference here is it's an aggregated balance. So from a central bank point of view, they issued it to a intermediary, such as a bank, and the bank issued it, distributed it directly to the consumer. Now, from this point of view, the central bank doesn't actually view it from a household level, from a balance ledger level. They only see it from a aggregated level from each of the financial services. The last one, which is the more popular one, which is being advocated by the BIS, is a hybrid model. So a model where, similar to the intermediary, it is still the role of the financial services to distribute the CBDC, while at the same time, the central bank will be able to track the issuance or who holds the CBDC, the household or corporates, from the ledger or from the balance of the individual level. Now and again, to calm everyone, the central bank is not going to monitor personal data. This is more like from a balance perspective without revealing sensitive personal information. Why this becomes a very popular model? Primarily because imagine if there's a distress, if one of the bank is under distress, the central bank will be able to initiate the transfer of balances, a transfer of CBDCs from one bank to a bank is like similar to a take up. So effectively, it promotes stability into the overall financial services. Whereas at the moment, it's just not there. Now, some of the high-level design choices, this is again coming out from our working group and also inputs coming out from the BIS. These are some of the key aspects, features that need to be considered. So things around like adoption, around like what will be the scale, what will be the how adaptable it is it targeted to a certain segment or is it wide-ranging? The transparency aspect and the privacy. Transparent privacy, although it's quite simple, it has a different sub designs, things around that you would like to consider around, like for example, like the transparency. What transparency you want to see? Is it from from the way CBDC being used, or is it from the way, for example, like when you do a transaction screening every time a CBDC transfers? Things around as well privacy. Is it privacy from a central bank perspective, or privacy from a distributor commercial bank, or is it from a household perspective? Things around like functional interoperability. So these are horizontal interoperability. Things around like supporting cross platforms. For example, like you can use the same CBDC for security, for settling your stocks that you bought in the Mumbai Stock Exchange, or you can use the same CBDC as well to pay effectively your loans to a commercial bank loans. Things around like network sovereignty, which is really a crucial requirement from a central bank. Things around like some features that we usually forego, like offline transaction. This is the one that's being a quite hot topic over in China, especially like a lot of countries all around the world, like even in the United States, even in Europe. When you hit certain area, when there's no technology, there's no infrastructure, there's no internet capability in that region. So how do you manage that? So this is where the offline transaction feature comes in. Things around as well, like the non-functional aspects like scalability, performance, resiliency, which is really a must. Otherwise it will be problematic. Now the last one I would say around, it's all embedded with the policy tools as well, like around like supervision, the tierings and limit, as I mentioned earlier, with a proper design in place so that it will not have a significant disruption with the financial sector. And also, like, do we really need an interest rate or not? Some of the sample projects we have here that we were involved in R3. So these are the wholesale CBDC, as I mentioned earlier. This is more around the interbank settlement. So this is more like in comparison to the likes of the RTGS, such as the one operated by the RBI, for example, for interbank settlement. So some of the central banks that I mentioned here, like Bank of Thailand, the most closest one, the most recent one, like Bank de France and Swiss National Bank, they all look into like the application of a wholesale CBDC in relationship to the RTGS. The most unique one here is Bank of Thailand, because like Bank of Thailand, similar to a lot of the emerging countries in Asia Pacific, not all banks are member of the RTGS system. So effectively with the wholesale CBDC, it allows credit unions, rural banks to be able to participate in the interbanking system. So effectively, it reduced the barriers, what we call like the clubs of the tier one banks in holding that CBDC. And at the same time as well, it reduces the need for like a collateral to, for example, when you do interbank payments, there's always a lot of those like gridlock because like one bank is still unable to settle. So you need collateralized, such as like a government bond to be able for the central bank to lend you money. With wholesale CBDC, you effectively eliminate the needs for a bond and reduce effectively the cost. So things around like the discussion linked to reserve accounts. Now, this thought of school of thoughts, nowadays, what I mean by reserve account, banks typically needs to open a bank account with the central bank, what they call like a reserve account or settlement ESA account to be able to do an interbank. Now with the CBDC, there's now thinking like probably you may not need that in exchange for a government bond to be able to get the CBDC, or should it be classified or segregated from reserve account? So some of the benefits that they learn from the wholesale CBDC is around really it solves compliance restriction. It promotes a real-time reporting. It's effectively reduced cost, and I was really quite excited because like part of the reason for CBDC it's at the moment it's like there's a empirical study that has been discussed out there by a lot of the research agencies around like 10% of a GDP of a country is actually associated to the cost of payment. So with the CBDC using in a wholesale, it effectively it halves that to a 5%, open up more liquidity, creating more liquidity to the market effectively. And effectively, it's good for us at the end, for the consumers, for the corporates, especially because it reduces the cost of payment. It also mitigates, it reduces the risk of delivery versus payment. So this is when you pay invoices, like it takes 2 days to settle. So within those 2 days, you need to set aside money because there's a risk that if you cannot pay, whereas with CBDC, when you have a cash on hand, you'll be able to settle it pretty quickly without any clearing. And also as well, it reduced delays and the cost associated with cross-border for wholesale. Another last example I have is the retail general purpose CBDC. This is widely being analyzed recently by Bank of Thailand and our project as well with Riksbank, which is the central bank of Sweden. So this is to address cashless society. You know, like a lot of the countries nowadays, we heavily rely on the private sector to operate the payment infrastructure. Then again, like if you imagine if cash disappears, what does it mean? Will be safe? For example, if the payment operator is involved in a bankruptcy or involved in a fraud, what impact does it have to the whole country? So that's why this is the reason why Riksbank is looking to like a retail CBDC to explore, and potentially that will help mitigate that risks. Number two, it solves around financial inclusion, such as the one in Riksbank and the Bank of Thailand. It enables to create what we call like the use of CBDC. You don't need to open a bank account, and as well, like as I mentioned earlier, it's also built your credit transactional credibility. So effectively, when you transact, you can now use like I have been heavily transacted. I have a historical credit score, a credit transaction, how I have been participating. It really solves the underbank. Imagine like if you had a bankrupt history, you cannot open a bank account. In fact, you cannot participate in the business world. So with CBDC decided to like address this way, it allows more participation to the market. In fact, it expands the ecosystem. It promotes the digital economy by removing any barrier. And again, I mentioned earlier, it's strengthening us compliance. It's giving us a fighting chance to fight financial crime. Now, with I end this session with effectively, let's answer some of the key questions being raised here. The first one is it's a question from our participant. With India looking at an official digital currency, what are the global examples to look at? Now, this is a very great question. So I would think it two way. Either it's a wholesale or it's a retail. So if it's a retail perspective, I would look closely to the one being run by Cambodia, because similarly, if you look into the business case, the problem they're solving, it's really quite applicable to India, because the concern there is really there's a lot of closed loop systems, and it's a lot of financial inclusion, and also as well the problem around like financial exclusion, which is because it requires you to bank account. It's also like the a lot of the using of the max rate. Number two, does an official currency pave way for the regulation of other private currencies? This is again a very great question. I would say yes, coming out from the experience in the United States. In fact, like the official currencies, CBDC has led the way to discuss around like the topic of a hybrid of a synthetic CBDC, which is yes, it will lead to usage of private currency. Then again, although there's a starting of a warm up of the discussion, like in Europe and in the US, but the challenge is really the implementation of policies. So I think probably I'll give it another 2 to 3 years before we see this in action. The third one, another great question, is there a similarity between how digital currency trading can also be regulated, like the share markets? This is again probably yes, from a market compliance perspective. Then again, like if it's a digital currency that is like high synthetic CBDC, yes, because I would mention to ensure stability, but I don't expect it to be like as massive as a share market, because we just have to remember the purpose of a digital currency is really effectively is for payment. Fourth, last question, which is a great one. Should India open up to the barrier of cryptocurrencies in exchange for barter of cryptocurrencies in exchange for services? And why are the adoption of virtual currencies in India is so much debate? What is the first step to resolve it? Now, cryptocurrency is a great question. It's not I mean like to open up the barrier, I think this will need to be very careful, especially because of the volatility aspect of cryptocurrency. And number two is really the comfortability of us making sure that there is legitimacy and how it's being used. Because unfortunately, one of the problems, challenges faced by cryptocurrency, it is being used for illicit activities. So that is something that we need to address probably from our policies in place. Now, why are the adoption of virtual currency in India is so much of a debate? I think it's primarily because it's driven. Virtual currency promotes efficiency, promotes peer-to-peer payment. It is the only, I would say, closest form of pay money can be used effectively, seamlessly in the digital platform. So I guess that is one of the reasons. And number two, I quite credit as well Libra, which is now called DM, which is also started the wildfire around discussion around digital virtual currency, and also to some extent, expect CBDC. What is the first step to help resolve this? I guess the first one is really I would encourage the public and the private sector to jointly research on the CBDC, understand, narrow down, and make an assessment what problems it is trying to solve, especially look into the definition of a CBDC, or like it is a legal tender. With an absence of a digital legal tender, is the whole e-commerce safe? So those are the key question. And number two as well, um, lastly as well, around the appropriate policies in place. Yeah, we also have two question. I think we have another few more minutes. One is how can an official digital currency promote blockchain development in the country? This is another great question. So digital currency definitely promotes that, because you now have a legal tender form in payment, and all use cases, all industry, the common denominator is payments. Once you have a mechanism that allows a seamless, a more secured, a more legal tender payments, or backed by legal tender, then definitely I would see a lot of innovation, a blockchain development. Imagine I would even expect CBDC through a programmable aspect, will definitely drive that. Now, blockchain is becoming a very popular underlying technology for CBDC, primarily because it's not just only from the security of a block, like the transparency, immutability, but as well the distributed aspect of that one. Right now, key problem with the payment infrastructures, whether you have like a centralized system or you have a more robust DR system, is really it's prone to attack. Whereas with a distributed architecture, you'll be able to spread that across, and you can spread across that problem. So imagine if one node will go down, it doesn't affect the whole ecosystem. One question, I think we still have time. What cautions need to be taken while launching an official digital currency for India? Definitely, the first thing is designing the appropriate policies. We need to make sure that we do not disrupt the banking system, the credit market, especially a CBDC that is designed purely for example, payment purposes, that designed not to motivate households to hold it and move their money from a deposit for a bank to a CBDC, because that will have a massive negative effect to the overall economy. We have one more last question. How will the interaction between fiat and digital currency work for the economy? I would say it will work in collaboration. I'm not a believer that digital currency will replace physical fiat or fiat. If I answer the answer correctly, it will be like I would say like another classification, another sub allocated for for digital currency. Definitely, it should work hand in hand. Unless probably we move into the future where everything is now wired, then I would say that fiat will probably disappear. Now I think we don't have any more other question. I'll probably hand it back to the host. Thank you so much, and a privilege to be part of this session today.
Thank you so much, Mr. Lim, for being here and giving such an insightful conversation, having such an insightful presentation in front of our audiences. Dear audiences, stay tuned for many more sessions lined up for you.